Hello everyone, welcome back, and thank you for being here, because today we need to talk about something that has quietly pushed the UK property market into one of the most dangerous positions it has been in for decades. What we're seeing right now is not just a slowdown, not just a seasonal dip, and not just people being cautious because of interest rates. The UK housing market has effectively hit a wall, and millions of homeowners are now stuck in a situation they never planned for and never imagined would happen this fast. Behind the headlines of the recent budget announcement sits a deeply complex tax trap that is only now starting to reveal its full impact. This isn't a simple change that only affects wealthy landlords or large-scale property investors. This is something that is now reaching right into the lives of ordinary families, people who bought modest homes, people who worked hard, followed the rules, and believed property was a safe long-term decision. The numbers coming out of industry reports are genuinely alarming. And what's even more worrying is that the government's response so far has raised more questions than answers. If you own property in the UK, or you're even thinking about buying or selling in the coming years, what's happening right now could completely change how you see the housing market. This freeze didn't suddenly appear overnight. The warning signs were there weeks before the mainstream media picked up on the story. Transaction data shows that sales volumes have collapsed to levels not seen since the 2008 financial crisis. Estate agents across the country are now using the same phrase to describe what they're seeing: a silent standstill. Homes are sitting on the market for months without a single viewing. Sellers are reducing prices, refreshing listings, changing agents, and still seeing no movement. And when viewings do happen, buyers are pulling out at the last minute, not because they don't like the property, but because they're scared of what might happen next. This fear is not irrational. It's being driven by a toxic combination of tax changes that few people fully understood until it was already too late. Many people assume this is just about high mortgage rates or general economic uncertainty, but there is something far more damaging at play. The budget introduced changes to capital gains, tax and stamp duty that, on their own, might have been manageable. The real problem is how these changes interact with existing tax rules. Together, they've created a perfect storm that even experienced financial advisors are struggling to explain clearly. As a result, advisors across the country are telling clients to pause, wait, and do nothing until the full consequences are understood. When everyone stops making decisions at the same time, the market freezes. What's truly alarming is that this tax trap doesn't just affect people trying to sell right now. It affects anyone who might want to sell in the future. Capital gains tax has been restructured in a way that is catching people completely off guard. Someone who bought a second property a decade ago, believing it would form part of their retirement plan, is now discovering that as much as 40% of their gains could disappear in tax. Allowances that once protected smaller investors have been cut so aggressively that even modest profits are being heavily taxed. These changes weren't clearly explained to the public. They were buried deep inside budget documents, hidden among hundreds of pages of technical language that most homeowners would never read. By the time people realized what had changed, their options had already narrowed. Plans that were made years ago are now collapsing in real time, and there's no easy way to undo the damage. Within the property industry, this situation is being described as an accidental freeze. Officials may not have intended to bring the market to a standstill, but they completely underestimated how these measures would interact. Stamp duty changes were promoted as a way to help first-time buyers, but instead they've created blockages at every level of the housing ladder. People who would normally downsize are staying put because the cost of moving no longer makes sense. First-time buyers are discovering that the supposed benefits are cancelled out by hidden restrictions and higher overall costs. The entire chain that keeps the property market moving has fractured. When one link breaks, the pressure spreads to everyone else. Sellers become buyers, buyers become renters, renters stay trapped, and nothing flows. Estate agents are now reporting that some sellers are simply giving up, pulling their properties off the market entirely, and choosing to wait for a better political climate rather than accept what feels like a no-win situation. Then there is the inheritance tax issue, which may be the most devastating aspect of all. Families who plan to pass property down to their children are discovering that the tax landscape has shifted dramatically. Inheritance tax thresholds have been frozen for years, while property prices continue to rise. As a result, more and more ordinary families are being dragged into a tax bracket that was once reserved for the very wealthy. When combined with the new capital gains rules, Some families are facing the horrifying possibility of having to sell the family home just to pay the tax bill triggered by inheriting it. This is not about millionaires with multiple homes and teams of accountants. This is hitting teachers, nurses, tradespeople, and small business owners. These are people who believed they were doing the right thing by building something to leave behind for their children. The emotional toll of this situation is enormous. Online support groups are forming where homeowners share stories of being trapped by rules they never knew existed and decisions they can no longer reverse. The impact isn't evenly spread across the country either, which is making the crisis even more complex. In London and the southeast, sellers are cutting asking prices by tens of thousands of pounds just to generate interest. In other regions, properties are sitting unsold, regardless of price. Areas that were already struggling economically are now facing the prospect of sharp declines in property values, meaning people's largest asset is shrinking before their eyes. Meanwhile, even traditionally strong markets are seeing demand evaporate. The mortgage market has reacted by tightening lending criteria even further. Lenders are pulling back, reducing product availability, demanding larger deposits, and applying stricter affordability checks. This adds yet another barrier for anyone trying to move, even those with stable incomes and good credit histories. Every layer of uncertainty feeds into the next, reinforcing the paralysis. Behind closed doors, industry insiders are saying the government badly misjudged how these budget measures would play out. Treasury models reportedly assumed the property market would continue operating more or less normally. Instead, transactions have collapsed so sharply that the expected tax revenue isn't materializing. Fewer sales mean less tax collected, not more. In effect, the policy has backfired. There are rumors of emergency discussions taking place about possible fixes, but any correction would require another budget and an admission that the original approach was flawed. Politically, that's a difficult position, and so homeowners remain stuck in limbo while officials weigh their options. Weeks could turn into months, and months into years, with real lives hanging in the balance. For anyone thinking about entering the property market right now, expert advice is overwhelmingly cautious. The long-held belief that property is always a safe investment is being questioned in a way not seen for a generation. Young people who saved for years to build a deposit are now unsure whether to buy, wait, or walk away entirely. Long-term landlords are quietly selling up and moving their money elsewhere, reducing rental supply and pushing rents even higher for those who have no choice but to rent. The ripple effects are spreading across the entire housing system, and no one can say with confidence where things will stabilize. Some analysts believe this is the start of a multi-year downturn that will permanently reshape the UK property landscape. Others think this is a temporary freeze that will eventually fall once people adapt. What everyone agrees on is that the current situation cannot continue. More than anything, this crisis has exposed a deeper problem. It has shown how disconnected decision makers have become from the reality of ordinary people's lives. Property is not just an investment. For most families, it is their home, their security, and their future. When the rules governing something so fundamental change without warning or clear explanation, trust in the entire system begins to collapse. This frozen market is driven as much by fear and uncertainty as it is by tax rates. Until confidence is restored through clear, stable, and fair policies, millions of people will remain trapped in situations they never chose and never anticipated. The real question now is not just how this crisis will be fixed, but how future governments can be prevented from creating similar traps that leave ordinary families paying the price for policies they never agreed to. If you found this breakdown helpful and want to stay updated on what's really happening in the UK property market, make sure you like the video, subscribe to the channel, and turn on notifications so you don't miss what comes next.